How much does it cost to buy a home in Charleston? Do I really need 20% down? And what are closing costs and tax rates in the state of South Carolina? If you're curious about any of these questions, you're in the right place. Hi, I'm Katarina West, local realtor. In this video, I'll be breaking down the costs of buying a home in the Charleston area. Here with me is Taylor.graham, a lender with North Point Bank, who I even used on my personal home. We'll be talking about local housing prices and the expenses that come along with purchasing a home, from closing costs and tax rates to insurance and more. Keep in mind there are a lot of factors that go into your personal monthly payment and costs. So for more accurate and up-to-date information, always talk to a professional like Taylor here. So let's get started. First, we'll talk about housing prices. How much will you have to pay to get into a home here? Well, currently, the median sales price for a single-family home in the greater Charleston area is about $445,000. For a condo or townhome, it is right about $300,000. There are areas that are more and less affordable, of course, depending on what lifestyle factors you want. If you want to be closer to the beaches in downtown Charleston, you're looking at a bigger budget. Here's a list of the median sales prices in the different areas around Charleston. You'll notice that Sullivan's Island, Kiowa, Isle of Palms, and Daniel Island are the most expensive and are in the millions. If you're looking to save some money and still have a great quality of life, the North Charleston or Summerville area might be great for you, as the median sales prices are $285,000 and $360,000 respectively. There's also a middle balance of prices in areas like James Island, West Ashley, and more. However, if you're looking at buying a house with a loan instead of cash, the total housing price is just one part of the equation. So Taylor, could you tell us a little more about your interest rate and how it affects your monthly mortgage payment?
Yes, the interest rate environment has changed quite a bit since last year. Last year, we saw incredibly low interest rates, which were allowing people to buy houses at much higher prices than we have in the past. Now affordability has changed quite a bit. So your monthly payment is probably the most important part of the purchase. Right now, if a 1% change in your interest rate can change your monthly payments by about 10%. So it's very important to look over your options when buying a house. You know, what your down payment is, and not just your interest rate, but if you're putting less than 20% down, what is your PMI rate? That can have a huge impact on your payment as well. So there's multiple factors, things that we need to look at and kind of figure out what's the best solution, financial solution for you buying the house. Because I think right now in this rate environment, it mostly comes down to what you can afford and what you can budget for. The payment, I think, is the most important part right now.
Next, let's talk about taxes, because this one is huge. South Carolina has some of the lowest property taxes in the country, but that is really only for primary residences. If you're an investor or purchasing a second home, it's a completely different story, and we'll explain. So in South Carolina, property is automatically assessed at a 6% rate, which means you'll pay taxes on 6% of the price of your property. Now, if you're buying a home as a primary residence, you get an exemption from this hefty tax, and you will only have to pay at a 4% rate. As you'll see, the non-primary residence rate ends up being about triple the taxes of a primary residence. For a $450,000 house as a primary residence in the city of Charleston, you'll pay about $2,200 a year in taxes. But if it's not your primary residence, you'll pay $7,200 a year for the same home. And trust me, they make sure that it is in fact your primary residence, after you have to apply for the lower exemption with your driver's license, tax returns, vehicle registration, voter registration, and more.
When it comes to property taxes in South Carolina, it's not the same as North Carolina, Georgia, a lot of other states in the country, where they just have one tax rate for each property, whether it's primary residence, investment property, second home. In South Carolina, it's either primary or basically investment second home. And the biggest problem with this, which a lot of lenders forget about if they're not from the state of South Carolina or they're outside of the state doing a loan in South Carolina, is that tax rate can have a major impact on the loan qualification for the borrower if they're using a tax rate as a primary residence when in fact it would actually qualify as a second home or an investment property. And that the payment per month could be over 3 times as much than the primary tax rate. So if they're not calculating this tax rate, I've seen it absolutely destroy purchases because the lender calculated the taxes wrong because they're not in the state of South Carolina. So it's very important to make sure that you've got the tax rate estimated correctly for the person, whether the residence is primary, secondary, or investment.
Also, if you are a 100% disabled veteran, you are actually completely exempt from property and vehicle taxes here for up to 2 vehicles. So Taylor, you talked a little bit about this already, but we'll go over down payments. How much do you actually need to have saved up in order to buy a home here? One common misconception is that you need 20% down to get into a house. As American saving rates have been at all-time lows alongside inflation, this is not practical for a lot of people. I personally paid only 3.5% down with a conventional loan on my first home. So Taylor, can you explain more about down payment options and what is the average down payment in South Carolina?
That's a very good question. When it comes to down payments, there is a huge misconception that you need 20% down to buy a house. This isn't true. Most first-time home buyers across the U.S. are usually coming with about 5 to 6% down payment on average. Some may be less. I mean, there are some loan programs that allow 0 down payment and you just pay closing costs. There are a lot of loans that do 3% down, 3.5% down. And then repeat buyers, second homes and repeat home buyers are usually about 12 to 13% on average. So they're usually in the 10% to 20% range for a second home purchase. There's also lenders like our bank that also have portfolio programs that allow 100% financing if you qualify. And VA also allows 100% financing. And then there's state housing programs that do 3% down and also give you down payment assistance towards that 3% down. So there's multiple programs and options. And the best thing you can do is connect with a lender to help them kind of guide you through the process because not everyone's situation is the same.
Next, we're going to talk about closing costs. In general, closing costs are typically about 2 to 3% of the purchase price of the home. But with the shifting market, you have a higher chance of getting a seller to cover your closing costs potentially, which is all part of the negotiations.
So when you're calculating what you need to purchase a home, you can't just take into account the down payment. You have to consider there are going to be thousands of dollars of closing costs that you may have to bring or the seller may pay. So I think the misconception when they do the mortgage calculators online is they're not thinking about closing costs because they don't really know them until they see them on paper. So,
in South Carolina, closing costs for the buyer include things like attorney fees, title work and title insurance, lender fees and points, prorated taxes and insurance escrows, HOA transfer fees, and more. So it adds up fast as these are all on top of your down payment. Another cost to keep in mind is insurance. Insurance is one of those things that it is impossible to give a blanket number for, as there are a lot of factors into play. It depends on location, flood zone, base flood elevation, and home characteristics like when the roof was replaced. However, insurance will be thousands of dollars a year at a minimum and will typically be paid through your escrow as part of your monthly payment.
Your lender is going to require homeowners insurance when they have a loan on the property. So they're going to require you to have homeowners insurance and may or may not require you to hold flood insurance. Technically, flood insurance can range anywhere from probably $400 to unlimited. You know, it's like and flood insurance premiums change from if it's a primary residence to a second home or investment property. I've seen flood insurance premiums go north of $20,000 if it's an investment property versus a primary residence. So that's a huge decision to make because especially if they're buying properties near the beach, that if they're buying as a second home or investment, that flood insurance can skyrocket compared to a primary home. And that's a huge consideration buying here in Charleston.
If you want an estimate on a premium, it's always best to talk directly to an insurance provider. Another cost with insurance to keep in mind is PMI, which is private mortgage insurance. And Taylor, I will let you take it away.
Yes, PMI is something that really doesn't get talked about as much. When you're putting less than 20% down to buy a property, a lot of times people are so hyper-focused on their interest rate that they're not taking into account the PMI. And that PMI is not just based on how much you're putting down, it's based on your credit score. It's based on a number of factors. And that PMI can be really low per month or it can be extremely high per month. That PMI can have more of an impact on your monthly payment than your interest rate being 5% versus 5.5%. That PMI is a very important aspect when you're putting less than 20% down. So there's ways to shop the PMI around to make sure you're getting the lowest PMI. So it's always something good to talk about when you're talking about interest rates, because that number is, in my opinion, with less than 20% down is just as important as your interest rate, and also knowing how to get rid of PMI after 2 years of owning the property.
Yet another cost to keep in mind when purchasing a home is homeowners association fees, or HOA fees. While it's easy to find a home here with no HOA if that's what you're looking for, let's look at how much you might pay in HOA fees in a community. In general, HOA fees in Charleston can range from a few $100s a year to several $1,000s per year. Condos and townhomes have higher HOA fees than single-family homes, as they often provide more amenities and services, such as maintenance of common areas, landscaping, water, and building insurance.
For a home, the average HOA fees is about $85 a month. This is your single-family homes in most neighborhoods usually have some sort of HOA, covenants and restrictions. And I would say on average, I see about $85 a month as far as your HOA dues. And usually those are paid annually once a year. You don't pay them monthly in your mortgage payment. That's one thing about HOAs is you do not pay those costs inside of your mortgage payment. Those are paid separately. So always keep that in mind that you'll be getting a bill at least once a year. And condominium associations in the Charleston area, I think you're usually looking about $300 on average for an HOA fee. Those fees include a number of different things for the HOA to run it, to keep things going. So I've seen them as high as $500. I've seen them as low as $250. But when you're buying a condo, definitely want to know about that HOA payment if you're financing it, because we have to include that HOA payment in your debt to income ratio to make sure you qualify. So it's a little bit harder to qualify for a condo at the same price point as it would be to qualify for a single family home.
When you're buying a home or condo in an HOA community, you will likely have to pay a transfer fee as well, which can be anywhere from a few $100s to 1% of the purchase price of the property. Since that was a lot of information, let's sum it up.
I think in today's environment, the most important thing is your monthly payment. You're going to have property taxes. You're going to have homeowners insurance. You may have flood insurance. You may have an HOA fee added in there. And I think right now, instead of being so hyper-focused on interest rates, we should be hyper-focused on these payments to make sure it's affordable for you and that we can basically estimate what this total payment's going to be before you even start the process of shopping for a house. So that way you know it fits inside your budget, whether you live alone or you will live with roommates or you're married with kids. We just want to make sure that those payments are within your budget. We're estimating your maximum monthly payment before we start the process, so there's no surprises along the way. You know up front what your payments are going to be.
Not included in this video is the cost of maintaining a home, so when purchasing, be sure to leave a cushion for any outstanding repairs or upcoming maintenance items, such as the HVAC, hot water heater, roof, etc. If you have any questions about financing or the cost of buying a home in Charleston, please feel free to reach out. We're here to help. And Taylor, thank you so much for joining me today.
Absolutely. It was great to be here.